Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Monday, the 9th of January, 2017. Welcome to the first normal trader bite for the 2017 calendar year. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Running down the news and the items driving the market this morning. Not much on deck, really. Um, Mainly the European unemployment figure, the Eurozone November unemployment rate came in at 9.8% in line. Again, it matches the lowest since September 2011. Investor confidence came in at 18.2, stronger than expected. But overall, the market is weak overnight. We're seeing mixed a mixed bag this morning. Remember, I did mention on Friday in the pre-recorded trader bite that the expectation for Friday, which actually didn't work out. It's unusual for the market to make a big move in the afternoon of non-farm payrolls. Generally, we go into a slumber early on, and Monday comes in with a fairly muted session as well. It looks like it's setting up that way currently with the market trading almost at even. The S&P is down 3 points, but it's a mixed bag. The bonds are strong today, up 66 basis points, followed by gold, Japanese yen, Treasury, the 10-year Treasury, and the Eurobond. This is saying that market is more risk averse this morning. Oil is down 2%. Oil seeing a drop of $1.12 right now. This is the February crude contract, and the volume is very light in the S&P. The volume currently in the S&P is 88,000. 88,000 at this point. It's expected to be between 140 to 175,000. Very, very light for some reason. So this is expected to be the first normal week back. Schools are back in session here in Chicago and elsewhere, and traders are expected to be back in business for the new year. So not much else to report. There's a lot of access to news. You can check that out. I want to spend a few minutes or a minute on the calendar since it's Monday. Want to look at the weekly calendar. This afternoon we get consumer credit at 3 p.m. Eastern for November, expecting 18 billion. We get Fed Speaker Rosengren, who has been releasing remarks so far. I posted one on Twitter, currently speaking. And then we get Fed Speaker Lockhart today at 12:45 Eastern. Tomorrow we get wholesale inventories and JOLTS job openings. Wednesday we get some numbers out of the UK overnight, but fairly quiet session on Wednesday. Thursday we get German GDP, Eurozone industrial production, U.S. import prices, and then we get a slew of speakers on Thursday. So 7:30 a.m. Eastern time, the ECB releases its monetary policy meeting notes, and then we get Fed Speaker Harker at 8:30, Fed Speaker Evans at 8:30. We get Fed Speaker Lockhart at 12:30, and we get Fed Speaker Bullard at 1:15. So lots of speakers on Thursday, and then Friday's got the bigger numbers. Friday we get retail sales advance month on month at 8:30. PPI core also at 8:30. Then we get business inventories at 10 Eastern for November, and then University of Michigan prelim. That's a pretty important number. That's a market mover. And then monthly budget statement at 2 o'clock on Friday. Additionally, Friday or Thursday night, actually, we get Fed Speaker Yellen at 7 p.m. Speaking at town hall with educators, and then during the session, the Friday session, we see Fed Speaker Harker again at 9:30. So most of the releases are stacked towards Thursday, Friday this week. Um, I'm expecting it to be a fairly muted week. The market has pushed new all-time highs in the S&P 500, and so there's further reason for the VIX to continue to collapse, volatility to continue to collapse, and for the market to be fairly muted this week. Let's take a look at what we expected for Friday. Again, this was pre-recorded. Here we go. Friday, the primary expectation is a test of the prior day's high and then a dip down into the prior day's range and then a turn up. Change your color. So the expectation is for a push out of range, out of the prior day's range, the prior day's high, a dip down, and then a push up and then consolidation into the rest of the session. I did say at the beginning of last week, you might want to watch that video. Tuesday, I did say that if we push through the 5760 area down here, the 5760 area, if we push through this area, we're likely to see new all-time highs, and Friday gave us that. They gave us all-time highs up at 2277. So Friday's session looked a lot like what was expected. We pushed early on, pushed through the prior high. We dipped down. We dipped down a lot farther than I expected. Consolidated, and then we started to push out. But this move here was unexpected. This move, I don't know what caused this move. I was actually on the road on my way back to Chicago on Friday afternoon, so I didn't see what this was all about. And then the market basically consolidated downwards. We have a P-shaped profile. So if you look at it, it's a P-shaped profile, and the market is below the neckline of the P-shape down into the flagpole. The market is looking weak overnight. There's a fair amount of resistance up here at 2271 on a first touch. And that's likely to drive our trading this morning. I want to point out I have moved this profile, this micro composite, and also I've shifted forward the start date, but I need to adjust that on this Office PC here. But I've shifted the date forward to August 2015 to eliminate a lot of unnecessary data. But if you look at this profile here, we've got some pretty good consolidation, a lot of build-up here. At 2264.50 is the MC point of control, this black, and we broke out of there. Any test down is likely to target that 2264.50, which is what's expected today. The market's taking back what it had traded on Friday. I want to also remind you that the high of Friday, 2277, is weak. We have a double top, a clear double top there. At the high, it's not. It doesn't seem to be done. I'm not seeing an excess high or an extreme high so far. In this setup. So the expectation is we're likely to turn around and push through. There are some measured moves above. As I turn on the flex levels, the range high of the week is expected at 2281 and a quarter. But a little bit higher, I'm seeing confluence at 2300 up here, just for a big picture for this week. That's the extreme high for the week. The weekly range is at 2301 quarter. But we have some measured moves ahead that are likely to confront us with some resistance as we push up. Let me clean this up. The overnight session. Just weak all around. It started out by pushing higher. It went to the point of control, the prior day's point of control right here. Small pullback, chop, continuation move that failed, and now we're in a corrective move. We're below the mid of the session where we formed a point of control below us. But overall, this looks like a classic continuation lower setup here. We still haven't broken the low that was put in earlier. We have a weak low at 67.75. I'm expecting the market to push lower on the open, if not before. It's likely to push through right now, actually. The overnight inventory is flat on Delta and slightly negative on price. Nothing great. So a push up is not expected to be very strong on the open. I'm looking to fade any pushes up on the open on the first try through 22.71.72 area. I'm looking for that to provide at least a 2 or 3 point rotation. And if it continues lower and gets back into this mess of a range here, this balance down here, that's even better. Look, the extended target down would be 22.64.50, which was what? It was the MC point of control, the most accepted price in this area since the beginning of December. Okay, let's see what we've accomplished this week. So as we pull up, let's look at the market profile chart. As we pull up the weekly MP chart, so back to the same narrative here. The market consolidated. It broke up, then it broke down, and then this past week starts one time framing up on the weekly. So we've gone from neutral to again being on the positive on the weekly. The monthly is still positive. So the overall higher time frame bias is to the upside, and that continues. But you can see here there's a fair amount of volume down below, and it brings us back into this fat zone, and that's what I'm expecting today. I'm expecting us to rotate down and to retest at 64.50. But overall, last week reversed the downtrend that we've had, the one-time framing down that we had the week before. And put us into neutral. As far as what we've done on a day-to-day basis, here's the market profile chart. This is the beginning of the week here, and overall, we've just essentially shifted our volume up. You could see these 2 days here consolidating pretty good. That energy went into the move on Friday, which has shifted the point of control up, higher highs, higher lows on the price action as well as on value and the point of control. The market is accepting higher prices so far. So that's how that's shaping up. As far as what we're expecting today, I'm looking for the market to, here we are at 67.75 again at the low. I'm expecting this to get pushed down a little bit before the open, but the expectation is for an open auction in range. I'm looking for a test to 71.72 area. I'm looking for resistance on the first push down. And then for it to make an attempt at 64.50. If we do get to 64.50, I expect it to base around here, and it might turn up as the market has turned up a lot, and then back to 71 again at the end of the day. This is hypo 1, so I'm going to be looking to sell. If it does push up, I'm going to be looking to sell the first try up. My goal, as always, is to go for 2 points. I'm always looking for just 2 points. And if the market starts to move in my direction, then I'm looking to campaign into a bigger position and then to push to ride the wave down to 64.50. But again, just make sure you don't overstay your shorts. The trend is up, and shorts are counter trend at the moment on pretty much every time frame. Every higher time frame than the intraday time frame. So I'm looking for a push up, rotation down 64.50, and I'm looking for it to base and end up somewhere around 71 by the end of the day. That's the primary hypothesis. If the market does an open auction and moves to 64.50 early, I'm going to be watching to see what happens on a rotation up. I'm looking for a corrective move. This would be a corrective move here, and then I'd look to get long back into the 71.72 area. That becomes my target. That would be hypo 2. So push lower, find buyers, base, look for a corrective move, jump on the train, and then look for a ride back to 71 away from 64.50 with the trend. Okay, so those are two key ideas for the day. If the market does open and push up with a shallow pullback and starts to move towards 74.50, then you cancel hypo 1, look for a consolidation here, and I'm looking for it to base and then to take out the 77 being the target, the key target. That would be hypo 3. Got it? That's all I have for you. There's not much more I can say other than I posted last night for those of you who registered for the webinar in December about order flow for execution, just using scalping for order flow. I posted that I'm not redoing that video. It's just far too much work. It's not a good use of my time. Instead, I scheduled for January 24th a remake of that session with a couple of twists in there, just to make up for that. And this time, I'm going to make sure there are no technical issues through thorough testing. There's a potential also of just pre-recording it. So if you signed up for if you registered for the webinar, you should have received an email yesterday from me stating that this webinar is going to be redone on the 24th. Other than that, just stay patient. It's the beginning of the year. The market's likely to be directionless. Just stay patient and hang in there. Look for spots where you have a clear advantage before you dive in. Good luck, and I'll catch you tomorrow morning. Take care.